Hello everyone, and welcome back to the channel where we break down the complex world of trade finance. Today we are diving deep into one of the most crucial articles of the Uniform Customs and Practice for Documentary Credits, or UCP 600. We're talking about Article 17, which deals with original documents and copies. This might sound a bit dry, but trust me, understanding this article can save you from a world of trouble and costly discrepancies. So take a notebook and let's get started. First of all, let us know, what does Article 17 actually say? It sets the rules for determining whether a document presented under a letter of credit is an original or a copy. This is incredibly important because letters of credit often specify the number of originals and copies required for each document, like a bill of lading or a commercial invoice. If you get this wrong, your presentation can be rejected. Let's break down Article 17, section by section. Sub-Article 17 states that at least one original of each document stipulated in the credit must be presented. This is the baseline rule. If the LC calls for a commercial invoice, you can't just send a photocopy. You have to present at least one original. It's a fundamental principle to ensure the authenticity and integrity of the documents that trigger payment. Now, here's where it gets interesting. How do you identify an original? This is covered in Sub-Article 17b. It tells us that a bank will treat a document as an original if it appears to be an original. This might sound circular, but the article gives us clear indicators. A document is considered an original if it appears to be written, typed, perforated, or stamped by the document's issuer. It can also be a document that appears to be on the issuer's original stationery, or one that states it's an original, unless this statement seems not to apply to the document itself. Or one that states it's an original, unless this statement seems not to apply to the document itself. Let's unpack that with an example. Imagine you have a commercial invoice. If it's printed on the company's letterhead paper, a bank will likely treat it as an original. If it has a wet ink signature or a company stamp, that's another strong indicator. Even if it's a computer-generated document, as long as it looks like the final intended version from the issuer, it will pass the test. The key phrase here is appears to be. Banks don't have to be forensic experts. They examine the documents on their face. What about a document that says original on it? For instance, a bill of lading often has the word original printed on it. This is a clear sign. However, the rule adds a caveat, unless the statement appears not to apply to the document presented. This is to prevent fraud. For example, if someone photocopies an original bill of lading where the word original is visible, and then adds a new signature on the copy, that statement original doesn't apply to the newly created document. The context matters. Now let's move on to Sub-Article 17c. This section addresses situations where a credit requires multiple originals. For example, a credit might call for 3 out of 3 original bills of lading. Sub-Article 17c says that unless the document itself indicates otherwise, a bank will accept as an original any document that is marked as such. So if you have a set of 3 bills of lading, and each one is marked original, second original, and third original, all 3 are considered originals. They form the full set. The same applies to terms like duplicate, triplicate, or first of 3, second of 3, and so on. They are all treated as originals. This is a common practice, especially with transport documents. Shipping companies issue bills of lading in sets. The holder of any one of these originals can typically claim the goods at the destination port. That's why the bank, acting on behalf of the buyer, wants to control the full set. By collecting all originals, the bank secures its interest in the goods until the buyer fulfills their payment obligations. Sub-Article 17c Roman 1 says that the original appears to be written, typed, perforated, or stamped by the document issuer's hand. That means original might appear primarily by the signature on the documents, and the diversity of signature varies. It may be handwritten or even by an electronic means, but it must be recognizable. Sub-Article 17c Roman 2 expresses that the original may appear to be the issuer's original stationery, for example, letterhead pad. Sub-Article 17c Roman 3 says that banks will accept the document as original if it states that it is original, unless the statement appears not to apply to the document presented. So let's recap 17c with an example. An LC asks for and certificates in 3 originals. The beneficiary presents 3 identical certificates. One is on original letterhead, and the other 2 are high-quality photocopies of it, but all 3 are individually hand-signed by the issuer. In this case, all 3 would be treated as originals because the manual signature on each makes it an original document according to Article 17b. The key is that each document on its own merit appears to be an original. Next up is Sub-Article 17d, which clarifies what a copy is. This is quite straightforward. It states that if a credit allows for the presentation of copies, then both originals and copies are acceptable. This gives the beneficiary flexibility. If the LC says invoice in 3-fold, it means you can present 3 originals, 3 copies, or any combination, like 1 original and 2 copies. However, there's a crucial exception in Sub-Article 17e. This rule says that if a credit requires a specific number of originals, for example, invoice in 3 originals, then you must present exactly that 3 originals. Presenting 2 originals and 1 copy in this scenario would be a discrepancy. The wording is key. If the LC says invoice in triplicate or invoice in 3-fold, you have flexibility. But if it explicitly uses the word original and specifies a number, you have to follow that instruction to the letter. Let's illustrate this. LC condition: commercial invoice in 3 originals. If the beneficiary presents 2 documents that appear to be original and 1 that is clearly a photocopy with no original signature or stamp, the bank will raise a discrepancy for not presenting the 3rd original. But if the LC condition was commercial invoice in 3-fold, presenting 2 originals and 1 copy would be perfectly acceptable. This subtle difference in wording can make or break a presentation. It states that such a document is considered an original, provided that it is signed. The act of signing, whether by hand, by facsimile signature, perforation, stamp, symbol, or any other mechanical or electronic method, validates it as an original. This is a nod to modern business practices. Not everything is typed on a typewriter anymore. Most documents are computer-generated and printed. Sometimes, a company might print 1 master copy and then use a high-quality copier to produce the others needed for the set. As long as each of these copies is then individually authenticated with a signature, stamp, or other mark, they are all elevated to the status of an original. Let's consider a practical scenario. A freight forwarder issues a house bill of lading. They print the first one from their system and sign it. Then they photocopy it twice and sign both photocopies. All 3 documents now bear an original signature. Even though 2 of them originated from a copy machine, the signature authenticates them as originals, and they will be accepted as a full set of 3/3 original bills of lading. So, to bring it all together, UCP 600 Article 17 is all about looking at the face of the document. Banks don't investigate how a document was created. They examine it for features that suggest it's an original. These features include the issuer's stationery, an original-looking signature or stamp, or an explicit statement that the document is an original. When a credit calls for multiple documents, terms like duplicate or twofold do not necessarily mean a copy in the everyday sense. They are often used to refer to other originals in a set. The most important takeaway for anyone preparing documents for a letter of credit is to read the LC requirements very carefully. Pay close attention to the exact wording. Does it say originals, copies, in duplicate, or in threefold? The answer will determine exactly what you need to present to get paid without delay. Understanding the nuances of Article 17 can help exporters prepare compliant documents and help importers set clear and practical terms in their LCs. It's a cornerstone of the documentary credit process, ensuring that all parties have a common understanding of what constitutes an acceptable document. It reduces ambiguity and disputes, which is what UCP 600 is all about. I hope this detailed breakdown of Article 17 has been helpful. It's a technical subject, but it's essential for smooth international trade transactions. If you have any questions or want to cover another UCP 600 article, please let us know in the comments below. We love hearing from you. I love hearing from you. Thanks for watching, and do not forget to like this video if you found it valuable and subscribe to our channel for more deep dives into trade finance. I will see you in the next video. Till then, remain safe and continue your businesses smoothly.